Hey guys, this is Philipp Schaedler, your local realtor in Los Angeles. I was able to get a hold of a very busy guy. His name is Mike Wolf. And Mike Wolf, over the course of 30 years, has perfected the strategy of turnkey investments. So if you're looking for an investment where you literally don't have to do anything but just invest and everything else is taken care of, management, everything, then you might want to listen to what we have to say next. I was lucky enough to get some time with Mike Wolf, so let's dive right into the interview. Hey guys, so this is a very exciting day today. I have the great opportunity to talk to a really great connection for investments. And I've talked to Mike Wolf a couple of days ago, but I've met him actually, or I was introduced to him through my real estate coach, Brian Casella, actually, who I'm a part of his Modern Success program. And I figured if he endorses Mike Wolf, he's got to be legit, you know. So, and after talking to him a couple of days ago, I thought it was interesting enough and really exciting to have him actually on here, and he agreed to have an interview today. And here is Mike Wolf. Mike, can you kind of briefly, just quickly explain a little bit about what you do? And then after that, I have a bunch of questions for you.
Sure. Well, first of all, thanks for having me. And I do a number of different things. I've been investing in real estate myself personally for about 31 years. And for about half of that, I've been also helping other people do it as well. And so Brian Casella is actually one of my star students. And he came to me to learn a specific strategy called tax deeds, which is one of the things that I specialize in. And so what that is, when people haven't paid their property taxes in a number of years, eventually the county, they need that money for their keep their schools open and their police department going and all that good stuff. And so eventually they're going to put people's homes up on the auction block if they haven't paid their taxes in 3 or 4 years, and creates an amazing opportunity. Brian actually got a property, a single family home, for $7,200 at one of these tax deed auctions. So that's one side of my business, is training. I teach other people how to invest in real estate. And this is mostly for people that want to make this their career and or have a side income. And then I get other people who come to me, and they're engineers, doctors, lawyers. So I've got quite a few doctors, for example, and they don't necessarily want to quit medicine. That's their passion. And they certainly don't need any more things taking up their time. And they come to me for my turnkey properties. And what a turnkey property is, that's basically, we go out and buy a bunch of properties from the banks. We inspect them, we fix them, we put tenants in place, and then we sell those to investors all over the world. And then we manage these properties for them. And so it gives people who are really busy, like our doctors and lawyers, a chance to get the benefits of owning real estate without having to do all that work. And so those are kind of the different aspects of the business that I help people with. And I've been doing that for a while now. And
that's amazing. That's amazing. So, and you've been doing this for what, over 30 years now, right?
Yeah, I've been investing for about 31 years actually, and kind of got into it by mistake, but it was a really good mistake. And got really lucky on my first real estate deal, and after that managed to lose a lot of it. And so over the years, I really decided that there's so many pitfalls out there, and there's so many places to make mistakes. I decided to share some of my best practices and either do it for people, buy the properties for them and fix them and take care of all that, or teach them but show them what not to do, because I made a lot of mistakes along the way.
Right. It sounds amazing. Yeah, because all the things that we talked about last time was just, for me, it was like, wow, because I've heard of situations or seminars where people say, oh, come and invest in real estate, but they all seem to be kind of shady. But your stuff just through and through makes sense. And what's most impressive to me is you buy these properties, you remodel them, I assume, right?
Yeah, we fix them up from top to bottom, and once we fix them, then we put tenants in place. And our program's a little bit different. We actually, if a tenant moves in, they're signing 2 contracts. The first one is a 3-year lease, and the second one is an option to purchase that property. And typically, if you buy, and by the way, the homes these days start around $70,000, which I know for people in California, that's like a down payment on a shed.
Right.
Lucky. So in Atlanta, which is my favorite market, we actually sell properties starting at $70,000, And if you finance it, you can get it for as little as 20% down of that, and the rest of it could be mortgaged. But we do all the work for you. And because, the second contract I signed, the first one is a 3-year lease. The second one is an option to purchase, and that's 50% more than what you paid for it typically. So if you buy a property for $100K, you've got a tenant in there who has a 3-year lease. And during that 3 years, they have an option to buy it from you for $150,000. And it works really well on a number of fronts. One is if you're doing a 3-year lease, whenever you do a 1-year lease and the tenant moves out, quite often you're repainting and you're recarpeting, and those expenses can eat up that entire year's worth of rent if they damage the home. And so people will stay there longer if they're planning on buying it, and or hopefully they do buy it. But if they don't buy it, they'll at least stay there longer and keep the vacancy rates down, and also keep the repair bills down. And the biggest enemy of a landlord is having vacancy and repair bills. And so we figured out a way to mitigate that.
And this is an interesting point, which segues into the next thing. Is another thing I want to point out, because you offer the 3-year lease and then the option to buy, that makes the tenants take better care of the property, right? They don't destroy it because they plan to live in it.
Right, exactly. Yeah, if you're planning on buying a property, you're certainly not going to go and trash it. And just somebody who's willing to commit to 3 years in the first place, that's a different type of tenant than the usual. Quite often we get transient people that go from, they move into your place, they don't take very good care of it, they probably stop making payments at some point, and then they move to the next place, and they keep repeating that. So we do a lot to ensure we don't get those type of tenants. But the 3-year lease in general, plus the option to purchase, it really mitigates a lot of the risk of getting those type of tenants in the first place.
Okay, that's amazing. So let me just recap. So you purchase these properties, you fix them up, you find the tenant, you screen the tenants, right? You find the tenants, screen the tenants, and obviously the best scenario is when they sign a lease for 3 years and an option to buy it, and also you have a management company that manages properties. So the reason I'm bringing this up is because what I really piqued my interest was the most impressive thing about it was when you told me to purchase or invest into an area that is landlord friendly. And I never really thought I gave that much thought, because in California, that's not really the case. In California, somebody may be that they don't want to pay the rent or they got unemployed, but they can stay for 6 months or more in a property and the landlord loses massive amount of money. Where in your area, maybe you can touch on that a little bit, it's like 3 weeks to get rid of them, right?
Usually it typically takes us, if somebody plays the system, usually we get rid of them in 3 weeks. If they don't play the system, usually we get them to move out earlier. We also have to remember these people have skin in the game. When they move into the property, they're giving what's called option consideration. Option consideration is kind of like a damage deposit, except that it's not refundable, and they know that right from the start. So if you're, and we tell these people, listen, if you're not serious about buying this property, it makes absolutely no sense for you to move in with us. Right. And so we know that we have a lot of people that do want to get into home ownership. A lot of them want to get back into home ownership. Maybe they owned at one point, they lost it during the recession. We're going to see a lot of people losing their homes during COVID, and people want an opportunity to get back into ownership, and we give them that opportunity. So, but they're giving what's called option consideration, which goes to you as the investor. You get to keep that money, and if they were to purchase a property, it gets applied towards a purchase price. But if they decide to move out prior to their 3 years, if they don't buy the property, that money is non-refundable, and they know this. And so it attracts just more serious people to start with. We also have other practices in place. The first one is we only invest places that are landlord friendly. So, as you mentioned, usually takes about 3 weeks to get rid of a bad tenant. It's very rare that we do get a bad tenant though. And so because of the practices that we do before they move in, and just having the 3-year lease just in itself, and having the option to purchase, and having them give us a chunk of cash that they know they're not going to get back, it attracts serious people. And so it makes a really big difference.
That makes total sense. Yeah, it's an amazing. I mean, it really, when I look at all the things that we talked about, you really took this whole thing, starting out, like you said, many years ago, with just 2 properties, and you perfected this into a science, really, because you have, from what I can see, every area covered. And I've looked at some of your properties, the inventory you have currently. And by the way, all my clients that are listing and interested, they can send me a request, and I send you the inventory that Mike has. But one other thing was really interesting, because why do you choose Atlanta? I think you had said something because major corporations have their headquarters there, right? So not like Detroit, if somebody gets unemployed in the auto industry and the auto industry goes down, then pretty much everybody is down. But in this particular instance, you research it to a point where these headquarters, I think Home Depot or whatever is up there, and if somebody loses a job there, they can just go to another company. So therefore, they're not jobless.
Right. So I'll explain the criteria that I use when I'm picking a market. And the first one you already touched on, and that is it landlord friendly or tenant friendly? Because even if the numbers look really good on paper, if you're in a place where tenants have a lot of rights and it's very hard to get rid of them, even if the numbers look great, if they don't pay you, it doesn't matter how great the numbers look.
Right.
And so the first thing I look at is this place landlord friendly or tenant friendly. If it's tenant friendly, I'm not interested. That market's never going to be a place I invest in. The second thing I look at is what are the chances of appreciation in that market? And so, right now we're seeing, a lot of people leaving California, for example, and they're going to places like Texas, they're going to Phoenix, they're going to places to lower their cost of living, lower their taxes, things like that. So we're seeing an exodus. And I think post-COVID, we're going to see it's going to be even more pronounced where, imagine you wake up and you're living in Los Angeles and and if you're renting, your rent's $4,000 a month or $5,000 a month, and you don't have a job. I mean, how long can you sustain that lifestyle? So people will move to less expensive places to lower that cost of living, but they're also going to go where there's jobs, because even if the rent is cheap and the cost of living is cheap, well, you still need money coming in. Right. You still need income. And so people are going to go to places where there's a lot of job creation. And Georgia, the government is very, very pro-business. And so what I mean by that is they offer all kinds of tax incentives for businesses to open their to have offices there. So a lot of them move their head offices there because of these tax benefits. So if we look at Delta Airlines, Coca-Cola, Turner Broadcasting, Home Depot, FedEx, the list goes on and on and on of all these companies that are based out of Atlanta because of the tax breaks. And the government knows that these companies are going to hire a bunch of employees. They'll tax the employees to death, but they give the companies a break. And so for better or worse, and I'm not making any judgment, but what that does is it creates a lot of jobs. And when it creates a lot of jobs, you have to also look at what kind of jobs are they creating. And in a place like Atlanta, because there's head offices, you have everything from CEOs down to, and trickles down all the way down the line to all kinds of different, services. And, but more importantly, we have diversity of industries. So we all know that the travel industry right now is not looking very good. And Delta Airlines, they're probably going to continue to lay off people. But if somebody who works at Delta, well, they can go to Home Depot. They can go to work at CNN and Turner Broadcast. They can go to, all these different companies in diverse industries. And as you alluded to, if you look at a place like Detroit, if you get laid off at Ford, well, Chrysler and GM aren't going to be hiring either. And it's one industry town. When we look at places that are all one industry, when that industry is doing well, if you look at the 1950s, Detroit was flying high. But automotives, that's not going to be doing well for a long time. Most people I know are not thinking, oh, I just got laid off, I think I'll buy a brand new car. Nobody's thinking that. In addition to that, the future of automobiles is tech. It's going to be Apple and Uber and companies like that are going to lead the way on self-driving and self-flying and who knows what else cars are going to do in the future, but they're not going to look like today's cars. So Detroit is really going to have to reinvent itself. So that's the number two thing, is what's going on in that economy that's going to lead to appreciation. And what leads to appreciation is pressure on the market, meaning more people moving there, population growth, and jobs are usually the thing, and a low cost of living is what's going to lead the way to entice people to move there. And if you can be in the path of progress, get into a market before it jumps up, that's where you make most of your money. And most people don't realize that. Most of my wealth I have a lot of cash flow now because I create a lot of wealth from my properties appreciating. But I didn't start with the cash flow. I mean, my first property, I think I made $25 a month in cash flow way back in the late 80s, early 90s. Certainly didn't change my life. But when that property went up 100,000, 200,000, that did change my life. And so you want that number two thing. The number three thing I look at is what are the returns? While I'm holding this property, I don't want to have to take money out of my pocket to feed it. I want my tenant to pay if I have a mortgage payment, I want them to pay the mortgage payment for me, the property tax bill, the insurance, and then everything that's left over, I get to pocket and keep. And so those are the three things in that order that I look at. And a lot of people make the mistake and they go straight for that third thing. It's like, how much rent am I going to get? How much cash flow am I going to get? When you get your first property or two, it's not going to seriously impact your lifestyle. But if that property, when that property goes up, and then you take one property and it jumps up in value, you take that equity, use it to buy a second property, a third property, fourth property. Over time, and this isn't get rich quick, but over time, you can build up a portfolio. And the best way to build a portfolio isn't to stick with your job and keep saving up money and buying more homes. That adds fuel to the fire. But the best way to build up a portfolio, and how I did it, is to have your properties that you buy today help support to buy properties for you in the future without you having to take more money out of your pocket. And one of the things that I do differently than most people is I jump from market to market when it makes sense. So prior to Atlanta, I was very, very well invested in Phoenix. That market absolutely took off for me. And the properties that I owned, from the time I got into the time I sold them, they went up. There's one 8-month period where they jumped up about 50%. But when I sold my homes in Phoenix to move that money to Atlanta, for every home I sold in Phoenix, I could buy 2 in Atlanta at the time. And so literally doubled my portfolio without taking a single penny out of my pocket. And that's the best way to do it. But that'll only happen if you do things in the right order and look at the right things when you're picking your market.
That makes sense, and I remember, I'm glad you mentioned Phoenix, because you had told me that before. I had a question about that. Do you recommend that your investors basically move with you? Like, for example, if they had invested in Phoenix, whatever, many years ago, would you then recommend them to sell there and move to Atlanta, for example, or whatever the next area is?
Yeah, well, there's always good, better, and best. So I do, every time I move, I'm very transparent about what I'm doing, and I call up my clients and I say, hey, listen, this is what I'm doing. You don't have to do it. These are your properties. It's up to you. And the vast majority of my clients do move with me because, one, I make it really easy for them to do that. I help them to sell their existing property, take the profits, and reinvest it in the next market. And it'll allow you to really build up your portfolio more quickly that way. But some people say, I'm really happy with my tenant. The house everything's going really smooth. I just want to stay with what I've got, and that's fine too. It's not as it's not as advantageous typically because you're going to stick with the same number of properties. But on the other hand, if something's working and it's not broken, that can be fine too. The disadvantage is, though, if you stick with one market, like let's say you invested in Phoenix, and let's say you bought a home for $100,000, now it's worth $200,000. Well, if you go to sell your home for $200,000 and you go to buy your next one, well, you're going to just replace it with another summer home for $200,000 again. Whereas when you go to that next market, maybe you bought it for $100,000, you sell for $200,000. Then you go to the next market, you buy 2 for $100,000 each. Now you've got more cash flow, and having double the amount of properties when a market takes off means you're going to have double the amount of appreciation, and also you get double the amount. A lot of people don't know this, but you get some tax benefits from owning revenue properties, and so now you can double up on the amount of tax savings. And a lot of the richest people on the planet, by the way, that's the only reason they invest in real estate, is to get the depreciation so they can reduce their taxable income. Warren Buffett's one of them. He obviously, I'm sure, doesn't mind the cash flow and the appreciation. Nobody minds it, but he really is strategic about bringing down his taxable income from the money he makes in all his businesses, and it brings down his taxable income. He pays less tax. He openly admits he pays less tax as a percentage than his assistant does. And I don't know how much his assistant makes, but I'm sure she's not a billionaire, and I know he is. So, it comes down to being strategic. And so the more properties you have, the more benefits you can have as well.
Interesting. So, yeah, because I think what's interesting about your system is, like you mentioned earlier, you can really get in with fairly low money. Like I think your lowest property was 70,000, or I saw another one. And also I want to say, the properties that you have that I've seen on your inventory are all really nice. They're like set back in the trees. They're not not crowded. It looks very peaceful and really like a nice environment. But for 70,000, 20% down, my God, 14,000, somebody can get in and start a portfolio with that, right? Because the idea, like what you just said, is to build a portfolio over time.
And more importantly than that, you can get in obviously with not that much money, but more importantly, you can start getting cash flow right off the bat, because these properties will all cash flow. So
that's right. You mentioned that. I saw that, and I did the math on this one place where I think for the one for 175, you put 35,000 down, and then the mortgage is then 175 is the price, and the mortgage is at 140. And with today's rates, it's like we're
Oh,
in
that's
such
so
low
amazing.
rates. I
Yeah.
mean, the mortgage is like $700, so you have immediate positive cash flow.
Exactly, and it's like now's the best time to do it in terms of the financing, because we're obviously at historic lows, and it's almost free money really when you think about it. So to,
It
to,
is, yeah.
to me, I always love the fact that the great thing about real estate is the bank actually has more money invested in your revenue property than you do, but you get all the benefits of it. You get the tax benefits, you get the appreciation. You always have to pay them interest, but right now that's so nominal anyway. And you
Yeah.
get all these benefits. And the bank, like I said, they're putting the vast majority of the money down for you. So it's pretty cool.
No, no, right now it's amazing. I just have a property in escrow, and my buyer got, I have an amazing mortgage broker, Cat Whitman, and my buyer got 2.75 for 30-year fixed.
Wow.
It's amazing. I mean, I have to say the market is so crazy because we made offers on 3 houses, didn't get it. And the last one, we finally made a very aggressive offer, very strong offer. And because I told my client, it doesn't matter so much that you put in money now, because over time, the 30 years, the 2.75% make up for it because you're saving.
Absolutely. Exactly.
So
So true. And that's the other good thing about our properties as well, is we don't let people compete. If somebody says, I'm interested in this property, it's first come, first serve. We're always getting more inventory, but we never, my goal isn't just to sell somebody a property and make as much money off it as possible. My goal is to help people build portfolios over time. And that's why I tell you, whatever I do is very transparent. I tell them exactly where I'm going and give them the opportunity to follow me. And I'll do all the work. My teams will do all the work to make sure that we get their existing properties sold, help them get into the next market. I already have the team set up. And so that's my goal. And so I don't really like to pit investors against each other, because all these investors ultimately become my friends, and we work together. We build a business relationship for a long time. And so we don't do that. And I know right now there's a lot of, which amazes me, there's a lot of competing offers all over the country. And in the middle of a pandemic, that's totally ridiculous in my mind. But anyway, that's another story.
Too. I have no idea. I think one of the reasons might be that because the government has been printing so much money, they might be afraid of inflation looming. And another one is the rates are so low. The opportunities are there.
Yeah, it's definitely inspiring people to go ahead and do it. And it's good that people are getting into real estate. But in any case, like I said, we don't pit investors against each other and make them compete. It's just like you pick the property, there won't be, the price is the price. It won't get bumped up. And I know in some markets, I was just talking to a realtor friend of mine in Toronto yesterday, and he said one of his clients paid $150,000 over list price to get a property. That's like crazy.
Wow.
So
my God.
It's nuts.
It's insane. I know everything is over list price, but that's insane. That's a huge.
That was ridiculous when I heard that.
That's too much. Another thing I want to talk about is your management. You have a management company, because I have a couple of clients that I already talked to about this, and they said they were interested. And that's also the reason why I really appreciate you came on with this interview, because they're going to see this. But they had sort of thought, that you should invest in a building or a house nearby where you can travel to, like, near LA, whatever, an hour away. But then I started thinking, if you have more than 1 or 2 or 3, you can't manage it anymore anyway. And eventually you need a management company. So that at that point, when you have one, it doesn't really matter if you're in Atlanta or here, because you have a company that manages it. But can you tell me how the quality is and what they do? So they basically manage anything from, do they do the tenant screening?
They do everything. And so first of all, here's the challenge, is that sometimes people think they're saving money by managing their own properties. And I used to think that too, because I used to do that for myself. And nothing can be further from the truth. So right now, for example, here we are, for anybody who's watching this during COVID times, the government's basically telling people that you can't kick out a tenant for non-payment. And I'm glad. We would never do that anyway. In the middle of a pandemic, we're not going to kick somebody out on the streets. But if you're managing this yourself, you have no idea how to keep people on track. So imagine your tenant hasn't paid you in 4 months now, and you still have a mortgage payment, and you still have to pay the insurance and the property taxes. So we have policies in place we put into play long before COVID ever came around. So you have to have systems in place to make sure that you're going to get your rent during times like these. And so I don't want to go into all the detail, but just really briefly, one of the things that we did, and I recommend for anybody who's got rental properties, you duplicate this. We basically called them before rent was due, by a few weeks before that, and said, hey, we know that you're probably you're going to be hunkered down, spending probably more time in the house than you normally do. Like, is everything good in the house? And so we had that conversation first, and we said, hey, you know what? Are you still working? Is everything good at your job? And then there's, we had some people that obviously got laid off and their businesses were shut down. And so we had already made a list of all the different things that people are entitled to, from the federal government, the state government, even at the local level. And we already had this all, itemized for them and said, oh, well, if you're, we understand your predicament. And if, here's some different things you might be entitled to. You might want to go and apply for some of these. So that was our second line of defense. And then, we basically said, for anybody who, if they were short of cash, they said, you know what, if need be, if you want to put this on your credit card, I know there's fees for that, we'll cover the fees. So we were very, very accommodating. And then, for people who absolutely couldn't make the payment, which is very, very few, we said, well, you know what, the owner of your property, they've got a mortgage payment too. And, they can let it slide maybe 60 days, but after that, we're going to have to sell the property if you can't make the payments. But we said, here's what we're willing to do. Any money you get behind, we'll let it slide 60, maybe 90 days. And then we're going to figure out how much you missed. And then we'll divide that up over 12 and you'll pay for it over the next year. And miraculously, when we told them their rent was going to go up for the next year after that, they all managed to come up with money. And so we have a very, very low vacancy rate. But I know a whole lot of people managing their own properties that had no idea how to handle a situation like this. They're struggling. They don't know what they're going to do. They're probably going to have to get rid of their property. And so you need professionals on your team, number one. Number two, if somebody came to you, if you lived in Antarctica and said, hey, well, we have a McDonald's franchise available here, and you're the only person living there plus some penguins, or they say, for the same money, you can get one in Las Vegas on the Las Vegas Strip. Well, the one that's further away is going to be a little bit less convenient in theory, but it's going to make you a whole lot more money. So my advice is to go where you're going to make the most money, get a professional team to look after it. And you don't need to go, you shouldn't be going to view the properties. There's no need for you to do that. If I were to buy a McDonald's franchise, the reason I buy it is because they have systems in place. And those systems provide cash flow without me having to trade my time to do it. I'm not buying a McDonald's so I can go and flip burgers. If I want to flip burgers, I'll get a job at McDonald's. I'm not going to buy a McDonald's. Right. So my advice is to go where you're going to get the best return on your investment, where you're going to make the most money. If you're investing close to home and you live in a place that has rent controls or the government's very pro land, very pro tenant, you are doomed from the start. All it takes one bad tenant, and any gains you get are going to get wiped out by one bad tenant. And so my advice would be to invest where it makes sense, have a professional team that takes care of you. And if you're picking good investments, the 10% that you pay the property manager is going to be a minor expense. It's already going to be built in. You're going to make more money having a property manager who's doing things right and making sure that you actually get your rent than trying to do it yourself. And the other thing is, if you try to scale it and you get to 3, 4, 5 properties, you just created a full-time job for yourself. And exactly. In real estate, in my opinion, the worst job is property management. So, at the end of the day, do it right and, be in the right markets and you'll get a much better result.
No, it makes sense. And also, it's a headache to manage your own properties, especially, maybe one you can manage or two, but, once you get into having more, it's a headache. And you don't want to have these phone calls late at night or whenever from a tenant saying that this happened, that happened. So since you touched on it, so it's 10% of the monthly rent is the management fee. Is that correct?
Yeah, so it's 10% of the monthly rent. And so when we figure out returns, when I talk to clients and I tell them the returns, that's already including the fact that property management is going to take a piece of it. But you're going to get a lot more rent. When you look at the end of the year, you're going to have a lot more rent, much more, unless you get really lucky. Dealing with tenants is a bit of a science and it's a bit of an art. Mm-hmm. And you have to get really good at it. And the advantage to having a property management team, and like I said, I used to manage myself. Once upon a time, I owned properties. And then I got into my second market, and suddenly I couldn't obviously be two places at the same time, so I couldn't manage both. And so I hired a property management team I reluctantly hired a property management team, and I realized that, man, they're collecting a lot more rent than I am. And even after I paid the 10%, I had more money in my bank. And what we would do is we played good cop, bad cop. And so the property manager, since he has to physically deal with the tenants all the time, he was always the good guy. He was a good cop. And so somebody said, oh, I can't afford rent this month. He said, can you let it slide for a few days? The property manager would say, oh, well, if it was up to me, I'd let it slide. But unfortunately, the owner, he's this grumpy old guy. And of course, people had no idea who I was. This grumpy old guy. And if I don't collect rent, he's going to fire me and he's going to kick you out of the house. Right. So, but I tell you what, if you can get caught up, like I'll give you 48 hours. If you can come up with rent in 48 hours, I won't even let him know. So now the property manager is building a rapport with the tenant. So now they have this little bond, and I'm the bad guy in the background, but I'm always over, they know that they're not going to get away with stuff. Right. When I used to manage my own properties, I was always trying to be the nice guy, and people will walk all over you. And, I remember, people would move into the property. They'll say, hey, you know what, I get paid on Friday. Can you wait till Friday? And I'd always say, sure, no problem. And then Friday would come along, and sure enough, oh, my car broke down. I need this money to get my car running so I can get to work. Can you let it slide another week? Next thing you know, they're a month behind, 2 months behind, 3 months behind. Managing your own properties is a nightmare. Don't do it. Even if you have one property, don't do it. Get a team who knows what they're doing, and you'll get a way better result.
No, it makes total sense what you said, because if you manage it yourself and you say no to something, then you're the bad guy, and you have this friction building up between you and your tenant, and the manager is basically the buffer that kind of keeps everything leveled, which
exactly.
I think.
And that's exactly also why when we look back, what I said earlier about how when COVID started to kick in, and the first thing we did is, hey, is everything good in the house? And we built up that friendship, and we're checking up, we care about them, which we do. We care about our tenants. And so we started the conversation that way. It wasn't, hey, where's your rent? Or are you going to be able to make rent this month? We first talked about their comfort, their safety. Is everybody healthy? Are you working? And so we built rapport first before we talked anything about money. So that made a big difference. And then we also, we said, hey, the landlord, a lot of tenants think that landlords are all living in castles and driving Ferraris, and we have no cares in the world. And so we just made, humanized the owner of the house and said, this guy's got bills too, and he's struggling too, and we're all in the same boat. And so he obviously wants what's good for you, but he's also got to look out for his interests. And so here's a happy medium. Here's a way that we can work this out where maybe you don't have to pay right now, but eventually you're going to have to make up for it. And so we just put it on those terms. And, by doing it that way, we got collected, like I said, we're almost at 100% rent. Well, other people, like I see lots of people are getting zero. And so it's all how you approach things. Sometimes little tweaks that if you try to do this on your own, this comes from 31 years of experience. If you try to do it on your own, 31 years from now, you might be as good as I am at some of these things, but you're going to lose a lot of revenue over 31 years trying to do it.
Yeah. And it's funny you touched on that, because I know some people already that have buildings here, and they have people that are not paying because of COVID. But then you have to add on, once they becomes due, they have another 6 months not to pay because of the eviction laws here.
Right.
So that really can turn into downspin. Now, tell me, how do you rate the quality of your management company? How do you choose it, or do they ever mess up, or do you make sure that they're on top of things all the time?
Well, here's why I created this turnkey operation in the first place. I used to only invest for myself. And then when I first started, I'm 54 now. When I first started, I was in my mid-20s. And so most people thought I was going to fail, and they weren't afraid to tell me that. And so I was hanging out with lots of people that said, Mike, you should go and, have something to fall back on. You're not going to make it. And, the one thing that I'll say about myself is if you tell me I can't do something, I'm going to prove you wrong. So anyway, as time went on, I became successful. Suddenly my friends would come to me, okay, well, you made it. So how do we invest in real estate? All of a sudden, all my friends wanted to, take me to Starbucks and pick my brain on real estate investing. And so I started to, instead of just buying, 3 for myself, I'd buy 6, and 3 would be for me, and 3 I'd buy for my friends. Next thing you know, my friends' friends started to call me up and, hey, you helped my buddy Bill. Can you help me too? And so this thing just kept growing organically. I wasn't really setting out to build this it wasn't really my goal. And then I started to get asked a lot of the same questions. So I put a YouTube channel up where I answer people's questions. And then I started to get people like internationally calling me up saying, hey, how do we invest with you? So first of all, that's how it started. But the reason that I decided to do it is because I see a lot of people and I could teach them. If I taught them everything that was in my brain, that would be a start. But having the connections, having the teams, all that stuff, that adds a lot of value. You can have the strategies and tactics, but if you don't have the contacts, you're not going to get the same results. And so I remember a number of years ago, before I got into Atlanta, I was very heavily invested in Phoenix. And this woman called me up who wasn't my client yet at that time. And she says, man, you're always talking about how great Phoenix is. Are you having trouble getting tenants? And I said, no, like we have plenty of tenants. This is kind of towards the end of me being in Phoenix. I said, I'm having challenge getting enough properties because it's got really competitive. And she goes, well, I bought this property like 4 months ago. And she didn't live in Phoenix, by the way. I bought this property in Phoenix 4 months ago, and my property manager said he's having a hard time finding a tenant. I go, well, I don't normally do this except for my clients, but I have a waiting list of tenants. So why don't I send my property manager over? He'll take a look at the property, and we'll fill the vacancy for you. And so my property manager went over there. Sure enough, there was somebody living in the home who had been paying cash to the property manager. The property manager was pocketing cash and telling the absentee landlord that there was no renters to be found.
Wow.
And so there's a lot of one of the challenges when you're investing remotely, as I mentioned, I recommend investing remotely, but the only way you can do that is you have to have very, very good teams that are looking out for you. So imagine if that was my client. My property management team, just so you know, is managing over 1,000 properties for me and my clients. Wow. And so if that would have been my client who called me and said, listen, did you know that your property manager is, collecting cash under the table? My property manager isn't going to lose one paycheck like he did with this client. He's going to lose 1,000 paychecks. I'm his only client. So he's going to go from 1,000 plus paychecks a month to 0 paychecks, just like that. So we have a lot of leverage over our teams. And I mean that in the best sort of way, meaning that, I love my teams and I treat them like gold, and they treat me and my clients like gold. So that's one of the reasons why I built this, because I know that a lot of people, if you're trying to invest remotely and you have one property, you have very little leverage over your team. There's a lot of opportunity for them to rob you blind. A lot of times your team sees a house long before you ever do. And so, for example, if they go and fix up the home, and they tell you, oh, there's no appliances in the house, we need $2,000 to go buy a fridge, stove, dishwasher, and you haven't seen it, you have no idea if they're telling the truth or not. Right. And so by the time you buy a property, you know that the appliances are in there. You know it's been fixed up. We put a 1-year warranty on the property. My team, if something bad happens, they will be gone just like that, because whatever they're doing to you, they're also doing to me and all my other clients. And so it gives us a ton of leverage. But my property management team, treats myself and my clients like gold, and they know that we're their only source of income, and we treat them really good too, because I wouldn't want to have to go and build a new team around what we do. We could if we have to, but we don't want to. And so It's just, we try to create win-wins with everybody we deal with, whether it be our teams, whether it be our clients, whether it be everybody that we deal with. We usually buy the homes off banks. We have great relationships with them, and when you have a really copacetic relationship with everybody who's involved, and we all want to keep doing business together, that's a perfect scenario. And it's very hard to recreate that. If you're just starting out, it's very hard to recreate that, mostly because just the cost. I mean, you're in California. If you wanted to go from California to Atlanta enough times to build a team, the cost of that by the time you buy your one home is cost prohibitive. Even if they take really good care of you, you've already invested a whole lot of money just to build this team. So it only makes sense if you're doing a lot of volume, unless you team up with somebody like myself who's already built the teams for you, already put the systems in place for you, and then it makes sense to invest remotely.
That's amazing. So you basically created this complex machinery, and you're just greasing the wheels, making sure everything runs fine, but you have it assembled like really in a perfect way. And it makes sense. You always want to treat people nice because you're going to get the back, and it's the best teamwork. I always say, with every business transaction, both sides should win. I was telling my client the other day, real estate transactions like a game of chess, except both sides should win. Not losing. So that's the way I see it. Another thing I want to talk about, I remember you said that the properties that you buy, none of them are older than 1995. Could you elaborate on that? Is that because you would expect older ones to have problems with maintenance issues?
Yeah. So one of the things I learned over the years, and we've done several thousand transactions over the years. One of the things I've learned is I've learned what works. When I can look back at all the transactions I've done, what's put the most money in my pocket. When I first started, I bought some older homes, I bought some newer homes, I bought some homes in really good neighborhoods, I bought some homes in not great neighborhoods. And after you get the experience of dealing with lots and lots of transactions, you can analyze the details and see, where did I lose some money? Where could I have done better? And so when you're dealing with older homes, when things go wrong, obviously when you're dealing with properties that aren't up to code, for example, or if you go pre-1978, you've got lead-based paint. There's all these different things at different points in history that we don't use in properties anymore. And so when you have an older home and you've got tenants in there, there's going to be a lot more things going wrong, a lot more complaints. So I just find, I like to stick to newer homes in what I call mostly B and B plus neighborhoods. So when we talk about neighborhoods, A would be, to put it in California terms, that would be your Beverly Hills. And believe it or not, those are not great areas to invest for buy and holds, because most of the people, as you know, in Beverly Hills, they're cash buyers. They've lived there for years. It's old money, and it's not a lot of renters for the most part. Right. So, the homes look really nice and they appreciate well, but it's very hard to keep them rented. And you're going to pay a premium for the property, but you're not going to get premium rent necessarily for it. On the other extreme, you go to the D neighborhoods, and that's a war zone. And I don't touch homes in those neighborhoods. They look very tempting on paper because, quite often, like in Atlanta, I could get homes literally for $30,000, $40,000 if I wanted to, and get into these really challenged neighborhoods. But when you get into a bad neighborhood like that, you're going to have a hard time collecting rent, because the type of people that you're going to attract as tenants are typically, they tend to lose their jobs a lot. They tend to be very transient. It's not a good place to be holding properties. In addition to that, it's very hard to build a good team. Like, put yourself in the place of a property manager. Imagine you could go and collect $1,500 rent in a nice neighborhood and get 150 of it, or you can go to a really bad neighborhood, collect, risk your life to collect $500 and make $50 for doing it. Who's gonna choose to work in a D neighborhood? Only somebody who's very desperate for business. And so you're not going to get good appreciation. You're not going to get a good team. You're not going to have a good experience. It's going to be a nightmare. So most of the money to be made is made in those B and C neighborhoods. B and C neighborhoods often look fairly similar. Quite often you'll have model matches of the exact same home. The single biggest difference between those neighborhoods, a B neighborhood is more owner occupied and a C neighborhood is more rentals. And so once again, back in the old days, I used to buy stuff in both B and C, and they both worked out well, but B always would outperform. And the reason for that is when you get into owner occupied neighborhoods, those are the ones that appreciate better. Because when you go to sell that property, how I made the most money in my career is buying homes using good, smart business sense and looking at the numbers, and then selling to somebody who's buying based on aesthetics. And if you're selling to another investor, they care about the numbers. If you're selling to an end buyer, if you put the right appliances in there, if you put the right countertops, if you have the right baking in the oven when they walk through the property, things like that will help you sell the property for a premium. And those are the properties that people are fighting over right now. When you see competing offers, that's what people are fighting over, not the revenue properties. They're fighting over the homes they want to live in. Right. They're scared they're going to be hunkered down and have to live, spend a lot more time in their homes. And so what I found is I like to be in B plus neighborhoods. That's where you're going to get the best appreciation. I like to buy newer homes within those neighborhoods. And when you do that, you're going to have a lot less expenses in terms of repairs. Whenever you have lots of repairs, if things start to go wrong, tenants get very, very irritated and they want to move out. And sometimes you're letting them out of leases, and now you got the repair bills. And so I stick to newer homes in good neighborhoods, and that's served me very, very well for many, many years. And that's what I do for my clients as well.
Yeah, I can see, because I'm looking at some of your properties right here on my computer, and they're all in nice neighborhoods. And like I said, they're like either set in front of trees, looks like there's a forest behind it, and they look like really nice. And some of them, what I look at is your 176,000. I mean, it's really you really do your homework when you get these properties, because I don't see any of them that looks in any way like, not good. They all look fabulous, really. And also
we're very fortunate because we buy properties in bulk from the banks, as I mentioned, and sometimes we're buying 20, 30, 40, and not all of them are good properties, by the way. And so I won't sell something that I wouldn't buy myself to a customer. And so the properties that we don't like, if they're not in a neighborhood that I like, if the homes are older, if they're not, if there's something that I wouldn't recommend holding, we sell those off quite often to hedge funds. They buy our kind of leftovers from us. And it kind of scares me and makes me glad I'm not invested with a hedge fund because of the stuff that they're buying. But anyway, that's another story for another day. So the only things that actually make it to my website are properties that I think make sense and that will serve an investor well. Because when I sell a property to an investor, like I said, it's almost like a marriage. Like, we're doing a long-term business relationship together. because my goal isn't just to sell them that one home. My goal is to help them build their portfolio. And if that property doesn't perform well for them, they're never going to buy a second property from me. I'm going to lose their trust. And so everything that I put somebody into has to work, or else I'm not going to be able to fulfill my mission, and that's to help people build portfolios. I'm just going to be, I'll be like, transactional, where, okay, maybe I sell one person one property, and then I'm always looking for my next client. I would rather work with less people, have less business relationships, but have those relationships, be very advantageous for all the parties involved, and where I can actually make a difference for them, and it's a great win-win for everybody.
Right. And so, about that is, you also said, I think, so when you do have a client, you actually have a phone consultation first, right? You're going to make sure that you kind of are a good match and they're looking at the right thing. Is that how you work?
Absolutely. I speak to every single person myself. We usually get on a half hour to 1 hour phone call. And I want to make sure, one, that I'm a good fit for them based on what they're trying to do. So if somebody comes to me and their goal is to get rich quick, I've got to burst their bubble and say, well, listen, I'm a 31-year overnight success story. So, I can't make you rich overnight, but I can certainly help you build the foundation to start. And then I can help you build on that. I can help you build that portfolio over time. And for some people that want to make money more quickly, I do have trainings where I can teach them how to go and be more hands-on, and they'll make money more quickly, but still not get rich quick. But I want to make sure they're a good fit, because like I said, if you're going to marry somebody, you want to know, hey, do you want kids? You want to have that conversation before you sign that contract. And same with, if we're going to be working together for at least, even if you do only one property, we're pretty much committed for 3 years to work together, because I want to make sure that we see the deal through for you from start to finish, so that you get, make all your profits. So we're going to be working together for a while. So I want to make sure that you're a good fit for me, and also that I'm a good fit for you. And if we're not a good fit, I have other friends in the industry I sometimes recommend people go to. But I only want to serve people that are a good fit for me, and that I know I can get a result for. And if they say, oh, well, I want to get into a buy and hold property, but my daughter's getting married in a year, so I need that money back in a year. We're not a good fit for somebody like that, at least on this side of the business. And so I maybe put them on the other side of the business, right? Put them with somebody else that can get them a result in that time frame. So it's all about being a good fit, and we don't work with everybody, but if people have the right mindset and we're a good fit for them, I absolutely welcome their business. So
that makes total sense. No, I mean, and it's smart, because you don't want to overpromise or promise something you can't fulfill. So you make it very clear in the beginning. This is what it is. No overnight, getting richer. And can you tell me, so what's the appreciation rate in Atlanta, or like in that area right now? It's the suburbs of Atlanta, right, where your properties are?
Yeah, we think the best bang for your buck is not in Atlanta itself. One, because you tend to get older homes. And two, when you get outside Atlanta, one of the things that you noticed, obviously, is that the homes are on nice big pieces of land.
Yeah.
And in a place like Atlanta, you've got kind of that, it's a much different mindset than LA, for example. People have that southern hospitality and charm. It's a much slower pace of life. And people like living out kind of more in the country. Not everybody. Some people, of course, love being in the city, and it's a great city. But we find you get a better bang for your buck when you get out, away from the city just a little bit. And what we find is that, a lot of the homes are on like an acre of land or half an acre of land. And, a lot of people prefer to raise their kids in that sort of environment instead of the city environment. And because it's very affordable, there are a lot of people choose to do that. And I think that, in a place like LA, where the traffic is horrible, and to get, you either have to decide, hey, if you want to be a beach person, you better live near the beach. If you want to be a Beverly Hills person, you're going to be a Beverly Hills person. But people there rarely go to the beach. And in Atlanta, people are willing to get in their cars and travel a little bit more to get to their work in order to be in a nicer environment, I find. And so one of the things we look at when we're picking neighborhoods within a market, we look at something called DOM. And I know with you being a realtor, that's days on market. And so the thing that we look at is, how many days does it take to find a renter, typically in this neighborhood, and how many days does it take to find a buyer? And so if we look at that, and we know that there's demand in the areas we're going to, then makes it really easy. Because the last thing we want is, if your tenant were to do a midnight move on you, which is very rare because of, they do have skin in the game. But if they did, we don't want your property sitting there vacant for 2-3 months at a time. We want it to be able to put somebody in there quickly. So we look at days on market when we're picking our neighborhoods. And I can't remember your original question, but I got on that tangent.
That's okay. No, the other question was what the appreciation rate is right now. It's
yes.
like 4 or 5% in Atlanta.
Yeah, so what we found in the 8 years that we've been there, on average, it's been going up around 4 or 5% per year. Okay. And luckily, rent has been going up too. And so, but one of the things that I believe we're going to see that we haven't seen yet is a big boom there in the not too distant future. I feel that market is underpriced right now, especially for how good the economy is, for the growth. And I'm expecting to see a really big boom there, and I think it could actually benefit from what I mentioned earlier. And that's post-COVID, people not having jobs and going where the jobs are, and going where the cost of living is reasonable. And so I think Atlanta and surrounding areas is going to benefit tremendously from that. And so we're waiting for that big boom. The 4 to 5% increase per year is awesome.
Because in LA it's about 7-8, so it's obviously a little bit higher. But still, another thing is the movie industry is big in Atlanta, because I know I have some friends that are in the movie business, and they're there all the time. And I think Atlanta must give them a tax incentive to have them come there. And so there is a lot of big movies made in Atlanta, which also must fuel the economy there.
Yeah, that's exactly what's going on. I have several friends that are actors. One of them actually just finished filming a movie with Nicolas Cage. I think they wrapped it up just before COVID, or maybe they just finished it up now. I'm not sure. But it seems like, and another friend of mine who also is an actor, he's on a TV show. They've been filming out of Atlanta. And so, yeah, it seems to be, the tax breaks. I can't even imagine how much the movie industry has to pay, being in California, to the government, because I know the taxes are ridiculous. Yeah. So a lot of industries, including the film industry, are heading to places like Georgia, where you get to keep a lot more of what you earn.
Wow, yeah, it's amazing. No, it's really amazing. I mean, the whole project you have there is just like blows my mind, because it's really, you figured it out to a science, and really this is an excellent opportunity for somebody who doesn't want to be hands-on, can really with low risk go in and spend not too much money and start building a portfolio that could substantially turn into something really, really huge, where you don't have to work anymore and just live off of that.
Absolutely. And the great thing is, once again, having my teams there to manage the properties means that you can do it pretty much effortlessly. You don't have to become a real estate expert. You don't have to follow the markets. And I'm always looking out for, your interest, meaning that, if another market makes more sense at some point, it's time to liquidate and take the profits off the table, and maybe, turn one property into 2 or 2 into 4. I'm there to help do that. And so the great thing is, people don't have to become experts. I'm there to mentor them and tell them when's the right time to get in and when's the right time to exit a market.
Which is another point, which is exactly the point I was trying to make, is you're almost like a financial advisor in a sense that comes with the package, right? I mean, because the only thing that people invest and pay, obviously, insurance is like maybe $500 a year for a property. Also, I think property taxes are probably lower in Georgia than here. I would imagine here it's 1.25.
Yeah, in Georgia it's usually 1 to 1.25, and but the homes are a fraction. They're like a fifth of what they are in Los Angeles, for example. Right. So so taxes are very reasonable. The insurance is very reasonable, and so you get to keep a lot of that income.
Right, closing costs are probably low too. Closing
costs average around $1,200, so it's very affordable compared to other markets I've been in.
Yeah. Absolutely. So what do you see remaining in Atlanta for a few years, or do you already have another area that you're thinking of or eyeing on or investigating at this point?
Yeah, well, I always wait till the last minute before I go, and obviously the cost of building a team to do the volume that we're planning on doing, it's a big undertaking to build that. And so the good thing is, usually when a market takes off and when it's going to be time to sell there and liquidate, usually you've got a good year. It starts to simmer. We can see certain signs, certain things happen in the market, and it gives us a sign that, hey, it's time to start looking at another market, because this thing's going to take off. And so so that's one part of the equation. The other part is, right now, obviously with COVID, we're seeing a lot of markets that are being re-shut down. I know California, a lot of businesses had to shut down, and I know like the restaurants, you can only eat on the patios there. So a lot is going to be affected by, how long do which places are going to be the most affected, by this pandemic. And so we're watching closely, but it's very hard to predict right now. A year from now, what are these different, which markets suffered the most. And so we're keeping an eye on it, but we're certainly not jumping to any conclusions yet because it's still early and things are changing on a daily basis at this point.
Yeah.
So.
Well, that too, and I think there's still a lot to be had in the sense of business opportunities in Georgia or in Atlanta, because it sounds like it's a really flourishing. It's also, I think, one of the busiest airports in the country. I think, right?
It is actually the busiest, at least during non-COVID times. It's the busiest airport in the world by volume of passengers, and so the airport alone, hires a ton of people.
Right.
And but yeah, it is actually the busiest in the world during normal circumstances. I think I heard not too long ago when everything was kind of shut down that there was an airport, I think in Juneau, Alaska, that was actually at that point for a very short period of time the busiest airport because a lot of deliveries and stuff were being sent all over the world. And a lot of the other airports were passengers weren't flying anywhere. But under normal circumstances, that's the busiest airport. Wow,
that's amazing. It's amazing. I think I have all the questions I had for you. I think we talked about that too. Obviously, it's not a problem for people to join into a partnership and purchase your properties, like 2 or 3 people together, as long as they're on board. That we got to stay in for 3 years, I think, or a certain amount of time. Right? You can't just pull the investment out.
Yeah, well, I think if you're going to do a joint venture with somebody, always make sure that you're on the same page as them because you don't, if you're buying and say, hey, I don't need the money back for 3 years or 5 years or 10 years. And they say, hey, well, this is all the money I've got, so I might need it back in a couple of years. You want to team up with somebody who's got the same goals as you, but absolutely, you can definitely get 2 or 3 people together, do a joint venture, and that's a great way to get in. And also, you can use retirement money. A lot of people don't know this. You can make that self-directed and use that to purchase real estate. That's another way. And of course, if you have a down payment and have decent credit, you can also qualify, to borrow money at ridiculously low rates right now. So there's a number of different ways to get into the game and get your first property. And now is in my opinion, the perfect time to do it because we're likely to see a bunch of homeowners now becoming renters, like we did in 2007. And that means that rent is going to go up. And then when rent goes up, so do the property prices because it's linked together. The more rent you get, the more people will charge for their revenue properties. And so now's the perfect time to get in for anybody who's thinking of doing that.
I think so too. Absolutely. I think we covered everything, and I think my clients are really going to appreciate this bit because we had a lot of information. It's a lot of amazing information. I have to free up some capital after New Year and join your idea because it sounds really, really exciting. And is there anything else you wanted to add, Mike?
Yeah, I just think, I just want to give more, I guess, of a mindset message to people because I know there's a lot of people right now struggling and suffering and they're watching the news and there's nothing good on the news. I recommend not watching the news actually, but I also see like a ton of opportunity coming down the pipeline. And, I think a lot of people, they'll look back 5 years from now and they'll either say, you know what, COVID gave me this quiet time. And I took that time to educate myself or reinvent myself or, try something different than what I was doing before. And I'm so glad I did. Now I'm further ahead as a result of that downtime that I had. There's going to be other people that are going to say, COVID came, I was doing really well. COVID came, took away my business, took away my job, and now I'm struggling. And so your mindset is going to really determine what things look like a year from now for you, 2 years from now, 5 years from now. And so one, stay positive, quit watching all that crap on the news, and take this time to reinvent yourself. And if real estate is something you're interested in, I'd be happy to help you with that and teach you it. If it's something else, whatever it is that lights you up, use this time wisely. And I think that there's going to be so much opportunity coming down the pipeline, and just be ready and positive and ready to take advantage of that.
I totally agree with you there, 100%. And I so appreciate you took the time to do this interview because it's great information for me, for my clients that I'm going to pass on. anybody, if you want to get a hold of it, you can actually mention me if you contact Mike that you saw this interview. That would be great. And other than that, they can get your inventory list so they can look at it.
Yeah.
And other than that, thank you so much, Mike. I really appreciate your time. This has been awesome. And I will definitely connect with you again to do some investment next year.
Yeah, thanks so much for having me, Philip. And it's been a pleasure. And as always, if you have any questions, reach out anytime. I'm happy to answer them for you.
Sounds great. Thank you so much, Mike. Appreciate it. You take care of yourself.
Thanks so much.